What is up, Prop Shop YouTube? Austin Trades NQ, founder and owner of the Prop Shop, back with another video today that I hope delivers a ton of value in improving your overall entries, your exits, and your trading emotions in real time. So this video, rightfully so, titled Entries, Exits, and Emotions, is going to really get into how building a strong playbook drastically improves your overall edge. Improved entries does equal improved exits, and that again equals improved emotions. The root of those emotions and how the playbook itself builds confidence that prevents FOMO, fear, and those negative emotions that get in the way of our process, and ultimately self-awareness and the role in all of this and tying it together psychologically. So today is Wednesday, February 25th, 2026, and I actually have been trading live this week for the first time in years in front of a crowd. It has been great. I've been sharing my screens, my entries, my P&L, my exits. And today was a tricky day. Today was a day where I feel like this video topic is a topic I've been wanting to talk about for a really long time. But today is providing me the opportunity to really get into some trading conditions that would normally 7+ years ago make trading pretty hard for me. And today was a really joyful trading day, and hopefully how you can get there too. So without any further ado, entries, exits, emotions, let's get right into it. Trading live today, I was prepared, pre-market plan today with my process, getting into it real quick, to be long above 25,100, 25,140. 30-minute chart, RTH levels, looking at candle bodies, candle wicks, same stuff I've talked about on the channel a ton. Provided a pretty clear and obvious 40-point range for a breakout, and price was trending above that on multiple different time zones into the upside, headed into the open, right? So hourly, 30-minute, 5-minute, I was seeing markets moving higher. And as price opened into the 6:30 Pacific, 9:30 Eastern time, I wanted to see a second stage reaccumulation move, which in simple terms is just a second buyer for my process into this 140 area. Oftentimes markets will kind of fake out off the opening drive, pull into liquidity, and then we see that bigger picture move. That's a setup in my playbook, but we did just see a straight up breakout off the open. And I talked about this, right? I was live talking to the chat, and we saw 20 minutes, 25 minutes of upside, and I asked a simple question: is anyone experiencing FOMO? And the resounding answer was yes. And we had a conversation about it. I was experiencing a desire to trade. Of course, I'm a trader. I want to be in the markets, but I wasn't experiencing real FOMO at this time, because improved entries come from having that expansive playbook that provides real edge and confidence. And 5 even years ago, stuff like this would bug me a little bit, because now having a playbook that provides me an opportunity to trade trending markets, balanced markets, failed breakouts and breakdowns, and violently, aggressively trending markets, it sets me up for entries and opportunity in almost every market condition. Now, how price gets delivered, the overall quality and momentum of those trade opportunities, that varies, of course, trade over trade. But as price was ripping to the upside here, your internal environment is really going to dictate the majority of your behavior, your decisions, your process. And if you're experiencing FOMO, it's going to lead to more poor decisions, and especially if you give into that. So actually something that really cured my emotional flaws, at the very least improved them, not sure they can ever be cured, but improved them, was building a stronger playbook. As markets ripped higher here, talking about FOMO in real time, talking through this, markets are going to oftentimes do one of three things: trend, range, or balance. How they do those three things is very different, and that's what we don't hear talked about in the trading education spaces often enough, in my opinion, which is how we trend. Later in the session today, we trended very slow. It took about 2 hours to get a 50-point move on NQ. Low volume today overall on higher time frames, but intraday, early in the session, we saw about a 200-point move in 30 minutes. There's differences between those things. And as we saw this aggressive upside trend, my playbook allowed me to have confidence, to stay calm, because these aggressive trends often provide failed breakouts, failed breakdowns, and just overall mean reversion trades that can be categorized as sweeps of liquidity, or for my process, second sellers or second buyers. And I talked this out today. Hey, 350 is a key level that on the 30-minute time frame, we saw RTH closes a week from today, where we saw multiple sells off this level from Wednesday last week, Thursday last week, close, open, rejections, follow through, and it's a psychological whole number. So as price trended to the upside here, my playbook provided me more edge, which in turn prevented a lot of the intensity of FOMO that I think a lot of people probably experience because they think I'm going to miss any opportunity to trade. But consciously and subconsciously, I know if we reach a key level and we see multiple signs of selling at that key level, I'll wait for an opportunity for a second stage redistribution. Simple terms, a second seller. And today, in real time, on funded accounts on Tradeify, the same ones we've been trading on the YouTube channel the whole time, we took a short live and it worked out great. And I was thrilled because even though I didn't participate in the upside auction today, I took a beautiful trade with the appropriate risk in what has otherwise been a pretty range-bound market on higher timeframes. Now, how can we stay calm and confident? Building a strong playbook for trending, balanced, and failed breakout and breakdown auction processes. That's my process. That provides me more edge. And the next thing that's really going to improve those entries and exits is allowing entries to come to me through action and behavior. What I mean by that is limit ordering into back-tested, confident setups within our playbook. If my playbook is genuinely extensive, if I've done the work, if I don't have 50 or 100 annotated charts covering these trades, I have closer to 5,000 for every single one of these trades. That builds the confidence to just set a limit order and let the market do what the market's going to do. I'm not trying to trade the market itself. I'm looking to trade my playbook. And so by limit ordering into trades, I have improved entries because this is ultimately a risk to reward game. So as the newer trader, or not knocking anyone's process, but market ordering into trades as they're starting to get quote unquote confirmation, which is really just your nervous system deciding this trade's probably going to work. I'm already in this trade, like today, live, limit ordering into 340. And granted, I did take pretty light size on this trade. But 20 points of risk here was a really high quality trade from my process, risking about 20 to 25, closer to $200 on the setup, looking for new lows. And at the pay line, which would be 20 points, at 1R, which would be 40 points, you're going to notice I scaled out at 20, which was the pay line. I scaled out at 40, which was 1R. And then I moved stops into the market because at the time, right, trending markets to the upside very aggressively. I'm looking to scalp these mean reversion trades, which had a lot to do with the size and the trade management. I'm not looking to trade this idea for a full move like we would have been looking to be long off 140 for a full measured move back into highs. And I got stopped out on this last contract, 30 points into profit. 40 points, 20 points, 30 points. This was a really high quality trade scalp for my process. And the idea here, really the core value here, is that this whole experience internally was nothing but calm for me because I know that my playbook will eventually provide a setup. And hey, it might not be today. But if you're seriously looking for a technical system that provides you opportunity every hour, every single day, every trading day of the year, you may be, not saying you are, slightly addicted or delusional about the goals and purpose of having a job, running a trading business, and being very serious about the revenue and the expenses that we incur by doing this. Allowing these limit orders to come to me is a byproduct of that same thing we just talked about. An expansive playbook with confidence, limit orders because we understand that these improved entries are going to lead to improved exits. I will have reduced emotions, and trading is a risk to reward game. I had to go through a lot of exposure therapy, which was constantly annotating these charts, constantly putting my orders on the screen and saying, this is where I entered, this is where I exited. And I want to understand where and why I did that so then I can build a process for improving. I wasn't having great entries market ordering into trades. But once you take not 50, not 100 annotated charts of your entries and exits, but thousands, maybe a lot sooner for some of you, I might not be that smart, then you start to build a process where, hey, limit ordering into confident setups within my playbook produces the most edge. And using those limit orders on most trades, not all, sometimes of course you have to enter a trade as it happens, but it allowed me to then improve my entries, which improved my exits, which drastically improved my emotions. And the root of those emotions stemmed from not having confidence, data, and enough edge in these exact setups. Constantly trying to discretionarily trade the market, follow other people's alerts, only trade one simple trade idea, it's really challenging. It's damn near probably impossible. Because the truth is, the markets move in different cycles, and in different cycles, they move with different types of delivery and adaptability, growth, a positive mental attitude, being aware, self-aware that I want to be able to momentum trade in a range-bound market, in a trending market, and in different conditions within those contexts. That allowed me to develop a really strong playbook that we've detailed in so many videos on this channel. That allowed me to improve my entries with limit orders, which as a byproduct drastically improved my emotions, which of course improves your exits. And the root of those emotions came from actually understanding, truly understanding. I guess I should say understanding the root of those emotions came from looking at these entries, looking at these exits, and being very diligent and serious about my approach to that process. Overall, if you could take any value from this video, it would largely be the following. Build a playbook for different market conditions that fits your personality and your style. Use the data from that annotated chart, from your orders, right? Your entries and exits, to really understand your edge. The exposure therapy that comes from that, the consistency that comes from being exposed to that, will do you wonders in the long run. For me at least, improving my entries was a byproduct of using limit orders. And yes, if you see me trade live in the future, you will see me use some market orders at times when it's time to get into the market. But even then, largely, as people have seen this week, I'm just dragging those same limit orders into where price is at in order to get an entry as price is moving in real time. And to understand these emotions, to improve consistently, to actually be self-aware, once we have a playbook, we have the data, we've done the work, we have to stay aware of our execution consistently. I'm still reviewing my entries. I'm still reviewing my exits. I'm still seeking to improve my trade management. Maybe not generate more knowledge about markets. My playbook is built at this point, but to refine and to stay on top of my process by doing these exercises. Bridging the gap, as we've talked about on the channel, by viewing your entries, viewing your exits, and consistently reinforcing positive behavior, because that's going to produce positive and consistent emotions. I hope you found a ton of value in this video. The psychology series is about to start getting a lot more in depth. We're gonna have a call to action here soon. We're gonna be doing an account management masterclass and hopefully really providing a lot more value in terms of trading psychology on a day in and day out basis as this series continues to grow, and we have some psychology masterclasses coming out soon as well. If you've enjoyed the channel so far, please like, subscribe, leave a comment below for any future videos you'd like me to drop. And as always, thank you for tuning into the Prop Shop. Trade safe, trade well, and peace.